All right. Hi, everyone. Welcome to this timing research special event. We've had two awesome presentations this week from Price Headley of BigTrends.com. So we thought we'd bring you one more with Chris Sayre of BigTrends. So you're going to hear from him in just a minute here. And just a reminder, this presentation is for educational purposes only. Trading is not suitable for all people. And please consult a financial advisor and only trade with money you can afford to lose. This session is being recorded and will be available on TimingResearch.com as soon as I can get it processed after the event. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find it there as well. So now we have, now I'm going to go ahead and turn it over to Chris.
Thank you, David. On behalf of Price Headley and all of our colleagues here at Big Trends, thank you again for having us this week. Glad to be here on this Saturday morning. Good morning, everybody. This is Chris Sayre. I am the lead consultant at Big Trends. If you have any questions after the presentation, maybe over the weekend, you're thinking about it, you want to drop me an email, you see my email address there, chris@BigTrends.com. Just like David, we've got to read the disclaimer. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risks. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the BigTrends.com homepage for more information. So a little bit about me. As we've told you, I am the lead consultant here at Big Trends. If you're not familiar with Big Trends, our founder and CEO is Price Headley. He started Big Trends back in November of 1999. So we just celebrated our 25th anniversary. Now you'll see I have experience throughout the financial services industry in several different capacities. But the last bullet point there is I joined Price and his team back in September 2011. But that does not mean I was new to Price at that time. I actually was one of Price's earliest clients back when he launched Big Trends in November of 1999, stayed in touch, used his information and methodologies throughout my career. And then we connected and put a deal together. And as I said, joined him in September of 2011. Enough about me. Let's talk about what you're going to learn today. The unlimited upside strategy, how to combine high reward and high win rate with weekly options. And I'm going to have some success stories for you, chart examples, so you can see what these trades look like. If you're anything like me, I believe most people are visual learners, and so do have numerous case studies to show you about how our trading system, and you see here the T30 strategy revealed. Little early reveal for you here. T30 stands for triple three options. You're going to learn how it works and how to get new trades as soon as today. So let's kick off today's event with a winning trade example on Apple, name that you should be familiar with. It's in the financial media. Seems like almost daily, and if not daily, definitely weekly. So again, this is from our trading system called the triple three options. These are daily candles, daily bars, if you will. And what we're looking for is consecutive gaps, all right, on a call trades. Now, this strategy can trade calls or puts. We'll talk about puts here in a little bit. But in this strategy, we're looking for a gap. So you have a gap up here. And even though the candle next to it the next day closes down red, you see that the open was a gap up. So we like to see these consecutive gaps up, and we're not thrown off even though that candle closed red. And as you can see, we entered there near the bottom of the candle. Now, when we issue these trades to our triple three options clients, these trades are coming out in the last hour of the trading day. And the reason for that is that Price and our analyst team want to see how the charts are setting up. Now, what you're going to notice is this blue teal line that I'm highlighting now is a Donchian channel. And if you're not familiar with that, it was created by Richard Donchian. I use the Thinkorswim platform. On the Thinkorswim platform, it's called Price Channel. I know some clients use TradeStation. On there, they call them price channels. But your trading platform, I'm sure, has Donchian channels or price channels. Now, what I cannot reveal to you today is the exact setting that our analyst team uses for that Donchian channel. But if you take advantage of the special offer that David and I've put together for you today, you'll be able to get access to what we call the settings and rules for the trading system. So let me take this ink off the slide here. So you see we enter here in the blue oval, and then the next day we're closing down 4 of the 5 contracts that we initially entered. So in this strategy, we're looking to sell at least 2/3 of the position at a 50% profit target. That allows you to get all of your trading capital back. And then we will hold on to that trade for no longer than 5 days on the final contract or contracts. In this example, it was just a single contract remaining, and then close it out. And that piece made 176.24%, or $683 in gross profit before any commission or subscription investment. Now, you'll notice down here on the slides, each one of these trades that I share with you are going to be based on $1,000 allocation, no more than 1,000. And you'll notice also that every trade will be at least $3.33 a contract or less. And we'll get into that here in just a few minutes. So 333 options, again, is the name of the newsletter here at Big Trends. We call them alert services. But let's talk about the strategy guidelines. So what's the average holding period? Less than a week. Now, as I've told you, I've been with Big Trends for over 13 years now, and I'm on the front lines at Big Trends being the lead consultant. And I interact with traders just like you, day in, day out, week in, week out during the trading week. And over my 13 years, the vast majority of traders have told me that they're swing traders. All right. So 333 options is a swing trading strategy. So if you're a swing trader, hopefully this keeps you interested. What type of strategy? We're trading price action, like I showed you with that Apple example. Now, we are using next week's options. All right. Next week options. Now, this strategy can issue up to 10 new trades per month. So 2, maybe 3 trades per week, looking for some trading action. And it has a win rate greater than 50%. Now, that's historically speaking, with average profits that are much larger than average losses. Now, we all know past performance, whether good or bad, doesn't guarantee future results. Future results are going to vary. But what's not going to vary is that our analyst team is always out there looking for trading opportunities for our clients. So we focus on quality and quantity. Let's dive into those details. This strategy looks at stocks with a positive 10-year profit factor. Now, that concept is new to a lot of folks. So again, our team of research analysts and Price Headley, they just don't throw things together. They put extensive research into finding these trading systems. And when they're looking at names to trade within the 333 options trading system, as it says here, they're looking to make sure that security has a positive 10-year profit factor. That doesn't mean every trade in that system over 10 years is going to be a winning trade. It just means that over enough opportunities over that 10-year period, it has a historical positive profit factor. Now, check this out. Trades are entered Monday through Thursday between 3:15 and 3:30 p.m. Eastern time. That's New York Wall Street time. So no trades are issued on Fridays. We'll touch on that here in a little bit. As I said earlier, up to 4 trades can be opened at one time, and trades are exited after 5 trading days at 1:30 p.m. Eastern time if they have not hit their stop or their targets before then. Okay. So you know that we're looking at names that test well. You know already that trades come out Monday through Thursday in that last hour of the trading day. You know trades are going to be swing trades. They're going to be exited, regardless of what's going on, in 5 days or less, right? And we give you stops and targets so you know how to handle the trades. So why should you care about this strategy? Let's look at the performance since inception. So since this strategy was started in January of 2023 through this morning, 178.90% return on a $5,000 account. So that's $8,945 in gross profit. So that means that $5,000 account is $13,945 in gross profit. Now, it's based on, again, allocating up to $1,000 to every trade. No commissions, no subscription investment factored in. Now, you'll notice throughout my presentation, the names that we trade in 333 options are liquid. So if you're a larger trader and it fits your financial situation, then you most certainly can allocate more than $1,000 per trade. But given the structure of this system, which you're going to learn more here in a few minutes, we suggest that you be willing to allocate at least $1,000 a trade so you can trade multiple contracts. So step one, we look for a specific setup. We're going to filter these new trades. As I showed you on that Apple chart, we're looking for consecutive gaps up or down, right, in a certain direction. We talked about the daily price channel. Again, that's called the Donchian channel. We're looking for new highs or new lows. And then on our put trades, we use a simple moving average, and it's only on the put trades. Why? Because when Price and the team were doing the research, constructing the trading system, they found that the simple moving average did not test well on call names, okay? And again, I cannot drive this bullet point home enough, a positive historical profit factor. Now, as I told you earlier, the exact settings are proprietary, but I will show you what these trades look like. Before I do, let's talk about when to take new trades. Again, new trades can trigger Monday through Thursday. So I've told you that those trades come out in the last hour of the trading day. So you do need to be available on Mondays, Tuesdays, Wednesdays, or Thursdays in that last hour of the trading day to receive a potential trade. Now, we don't take new trades on Fridays because the 5-day time stop would have us exiting on expiration day, which we believe can be a volatile time for options traders. Now, this strategy, as I told you earlier, looks for next week's options that are priced, remember, at 333 or less, and our team uses ATR to select strikes. Now, that's another nugget piece of the trading system that you would get from the settings and rules sheet. ATR, if you're not familiar with that acronym, it stands for average true range. Now, utilizing our set and forget stops and targets makes this strategy a perfect fit for busy traders. As I told you earlier, I've been with BigTrends over 13 years, interact with folks just like you every day during the trading week. And many of you are still working, whether it's running your own business or working for somebody else. Some of you are retired, but you're volunteering, taking care of grandkids, whatever the case may be. You love trading, but time and finding the names to trade are difficult and challenging. That's where we come in with our research. You're hiring us, paying us for our subscription, right? For our team of analysts to do the work for you and send these trades to you during the trading week. So why trade options that are priced at 333 or less? Because it allows for at least 3 contracts per $1,000 allocated. Now check out this last sentence here, which is important because we aim to sell, as I told you earlier, 2/3 of our position at the first target level. Okay. And what is that first target level? I told you earlier that first profit target level is 50%. Okay. Now you buy 3 contracts at $300. If you're newer to options, there's 100 shares represented in every options contract, right? So 3 times 100, 300, that's 900 invested. You sell 2/3 of that position at 50%. So that would be 2 contracts. So that's at $450. So that's $900 back into your trading account. So you see, we use this 50% target and we do the 2/3, right? We started with 3 contracts. So we're selling 2. So you've got the 2/3 concept now, and you get your original trading capital back. And now taking 60% of the position off at 50% makes the trade a risk-free and allows for unlimited upside on that final 1 contract. Okay. Now let's talk about some more examples. Here's Philip Morris. You may be saying to yourself, Philip Morris, it moves. Yes, it moves. It tests well historically. And so that's why we trade it. Now, remember with calls, this is a call trade. You're looking for consecutive gaps up. So this red candle here, that opening price is a gap up from this close. So that's number 1 gap up. And then you see this gap up here. So that's gap 2. That's what we're looking for. And that trade is entered in that last hour of the trading day, right? Now, Remember, we're targeting 50% as the first profit target objective. And when we do that, we're getting 8 contracts back out of the 12 initially entered. That leaves us with 4 contracts. Now, what I want to point out is look at the contract price, 80 cents per contract. That's why you can get so many contracts allocating up to $1,000 on that trade. Now, let me take this ink off the slide here. So we're entered in the oval. We take the first profit target here in the square, and then we let the trade run, right? Let the trade run. So you've got your entry date, then you've got 1, 2, 3, 4, 5. So remember, we'll hold it for 5 days on the remaining piece. We're looking for that trade to run, and that's exactly what Philip Morris did. It made 325%. And again, I've been around the financial services industry for a long time. I'll be 56 next month. So I've seen a lot of things and experienced a lot of things. And you might be thinking that Philip Morris does not move. Look, we're not looking for it to move multi-months, multi-years. We're looking for it to move in a very short time frame, 5 days or less. And it did. And if you'd allocated up to $1,000 to that trade, you'd have made a gross profit of $1,360 before any commission or subscription investment. Here's Apple. Check out this Apple trade. 4 contracts were entered. 3 contracts are sold at the 50% profit target level. 1 contract closed out at 933.78%, $2,406 in gross profit before any commission or subscription investment. Now let's go down here to the chart. Remember, the lines, or the bands, if you will, are the Donchian channel. Again, some platforms may call them price channels. So we're looking for a relationship with the price channel for calls on that upper price channel, but we're also looking for the consecutive gaps, right? So here's the close. Got a gap, and even though that candle closes red, we enter that trade near the end of the trading day. Apple gaps up the next day, takes off, allows us to capture that plus 50% there in that first bar, and then we hang on and we close it out and make 933.78% on that one remaining contract. Now, those were call trades, but as I said, this strategy has also seen success with puts. We can trade in either direction. Check out this Wells Fargo trade, okay? This is puts. Now, with calls, remember, we're looking for the upper Donchian channel. So with puts, we're looking for the lower Donchian channel relationship. We're looking for a low below that Donchian channel, lower Donchian channel band. Now, with puts, we're looking for gap downs. You see, let me take this ink off here. The green candle before the blue oval, this is a gap down from this red candle close. All right, so that's gap down 1. Okay. Then we get a gap down, and it may be a little confusing, but this is the close. This is the close on the prior bar, and this is a gap down here at the bottom of this blue oval. So those are our 2 gap down situations. Even though those candles close green, we're looking for open and close relationships. All right. So 2 gap downs with puts, and we need a move below this lower Donchian channel. And we get that, and we enter the trade, even though the price is above the Donchian channel. Okay. Even though the candles close green, we still enter that trade. And Apple gaps down hard the very next day. And we went well beyond our 50% profit target, because at the open here in this blue rectangle resulted in an 86.15% gain on 10 of the 15 contracts. So that meant we had 5 contracts remaining, close it down 75.38%, and made $805 in gross profit before any commission or subscription investment. Now, as I mentioned earlier, taking 2/3 of the trade off at plus 50% makes the trade risk-free. So even if the final third reverses, the trade can still generate a nice profit. So let's talk about this example. This is Delta Airlines. These are calls. So we're looking for those gap up. We have gap up one here in that very small green candle. Now, this is a slight gap up in the bottom of the blue oval, but it's still a gap up. It tests that upper Donchian channel here in the middle of the candle. And then we enter in that last hour of the trading day. 2 days later, Delta hits our 50% target, 50.47% to be exact. So we're selling 6 of the 9 contracts that we entered, leaving 3 contracts. Now you'll see the 3 contracts traded back because remember, we're going to hold on to these no longer than 5 days for the remaining piece of the trade. And it only made 0.93%, 0.93%. So essentially break even, right? But the trade still made $327 in gross profit before any commission or subscription investment. So if we can't take off exactly 2/3 of the trade, then we'll round up. Now, you may have noticed that on a few of the examples, but let me drive it home with this exact example on Microsoft. So you enter 4 contracts, can't do 2/3, so now it's going to be 3/4 at the 50% profit target level, leaves that one remaining contract. And look what happened with this one remaining contract. It almost went to 0 because of this big gap situation over here. But that's okay. It wasn't a huge win, but it was still a win. That's why we're proponents of taking at least 2/3 of the trade off, getting your risk capital back, and then let's see what happens. Didn't work out on that last piece of the trade, that one remaining contract, but we still came out of the trade okay, 135 in gross profit before any commission or subscription investment. Now, let me take that ink off, and let's go talk about the trade again. So remember, we're looking for gap up. So the small green candle is a gap up from the prior day. This is a gap up here. It goes through that upper Donchian channel. So we get the gap up and the move above the upper Donchian channel. We enter the trade in the last hour of the trading day. Even though the candle is red, it has met our parameters for the 2 consecutive gap ups and going above that upper Donchian channel. So we enter. As I said earlier, we take off 50% next trading day, get our capital back, and then the trade just turned over on us and didn't work out. Now, listen, not every trade will be a winner, okay? I've shown you trades that the first piece was a winner, second piece was a loss, or essentially break even. But not every trade's going to be a winner. When I shared with you the stats earlier, I told you past performance doesn't guarantee future results. Future results are going to vary. But those results that I shared with you on the performance of the 333 options system since its inception, that factors all winning and losing trades in. Okay, remember that $5,000 trading account went to over $13,000, right? Before any commission or subscription investment. But there's no compounding. That's adding all wins, subtracting all losses, and that was the result. So let's talk about a losing trade. This is Bank of America, BAC, right? Now it lost 52.63%. Got a gap up, this very small green candle. Okay, so that's one of the pieces of the setup. You got a gap up the next trading day, so that meets the 2 gap situations. You see the Donchian channel. The price violated or went above the upper Donchian channel. So the trade is entered in that last hour of the trading day. Stocks works higher, right? Works higher. Never reached our 50% profit target level. Never reached our 50% profit target level. So we use a 50% stop, and it hit that 50% stop, so we shut it down. We don't roll, we don't adjust, we don't try to work our way out of it. We take our loss and look for the next trading opportunity. Now, that does not mean we won't ever trade BAC again, okay? So remember when I told you earlier that our research team makes sure the names that we trade and send out to our 333 options clients all have a historical profit factor. BAC, Bank of America, test very well in this system. It just didn't work out on this particular trade. Now, the final piece of a winning trade is allowed to run. I've shown you that on some chart examples without a stop loss on a final profit target. Okay. That approach has resulted in some massive winners, like this example on Wells Fargo. Wells Fargo, 59 cents a contract. That's why you see 16 contracts were entered. Remember, every trading example today that I've shared with you is based off a $1,000 allocation. Got a gap up in that red candle. Got a gap up in the green candle. You see the price going above the upper Donchian channel. We enter. Very next day, it reaches our first objective, the 50% profit target level, 50.85 to be exact. We sell 11 of the 16 contracts, and then we let the remaining 5 run. So remember, we are hanging on for 5 days. So the first profit target was hit on day 1. Here's day 2, day 3, day 4, and then we get that nice big gap up and close it out on day 5 for $722.03%. That's $2,460 in gross profit before any commission or subscription investment. Trading a bank stock. Remember, folks, we are swing trading. We're not looking for long-term trends. We're looking for quick, short-term swing trading moves, up or down. Again, we can trade calls, we can trade puts. This is a very successful example that was achieved trading Wells Fargo. Now, we send our subscribers real-time trade alerts. When are those alerts sent? In that last hour on the trading day, Monday through Thursday. So when this strategy triggers a fresh signal, we send them out, right? Doesn't mean there's going to be trades every day, but when they are triggered, we send them out in that last hour, real time. So here's how you can get them. Remember, the name of the newsletter, we call them alert services at BigTrends, is called 333 Options. So 12 months of trade alerts from 333 Options. You're going to get access to trading resources. A strategy session video that Price Headley, our founder and CEO, recorded. It's a deep dive into the 333 Options trading system. You heard me reference this a few times throughout my presentation. You'll get access to the settings and rule sheet. What is that? It's a 2-page document that would reside in your BigTrends account that you could save to your favorite device, laptop, desktop, whatever it may be, okay? You can print it out if you'd like, but it's the condensed version of the strategy session video. Price does weekly video updates, breaking down charts, successful trades, and trades that aren't successful each and every week. He also shares market commentary. He records those on Mondays. We make those available to our 333 Options clients on Mondays at 6 p.m. Eastern time. We alert our clients via an email notification at 6 Eastern to go in and watch that recorded video on their schedule, okay? Now, these resources, you don't have to use them, but if you want to learn more, we're about educating you if you want to learn more. If you just want to sit back and get the trades and place the trades, that's great. But if your curiosity gets you, your desire to learn more is there, then we provide these trading resources. What if you have questions? What if you have questions along the way? No worries. In the welcome email that you'll receive from our team when you take advantage of this offer that I'm about ready to reveal to you, you're going to get a dedicated email address that goes directly to our research team. You can use that for any questions about 333 Options trades, anything you may listen to and watch in Price's strategy session or his weekly video updates, or anything you may read and study on that settings and rule sheet. Now, that has a total value of $3,564. All right, that's 12 months, $3,564. That's based off a $297 per month list price. So today's special package, 12 months of trade alerts from 333 Options, retail value $3,564. But David and our team at BigTrends, came up with a $797 after an instant discount. Okay. After an instant discount for you being a part of the timing research community. And then they decided, you know what? It's Saturday morning. Let's give them something else. How about an extra $500 off for a timing research account credit? So if you're quick in doing the math, you know that's $297 for a 1-year subscription. Now, this is expiring at midnight. All right. I know it's Saturday. I know you want to get your weekend started. So before you do, go to TimingResearch.com /BigTrends. TimingResearch.com /BigTrends. David, are you able to put that link out there for them, or do I need to do that?
Yeah, it's in the chat now.
Okay, great, folks. So grab that, and you can go to that checkout cart, and then I'm going to walk you through that as well, because there's a couple things that I want to point out. So let me go to that URL and grab that, and then I'll have that come over and show you exactly what that looks like. So check this out. This is the checkout cart. Billing information, top left. Very simple, first name, last name. I'm going to click into this email field. This is very important. Again, on the front lines at BigTrends, I've run into this situation several times a week. I know many of you have multiple email addresses. Please enter your email address that you want to use to receive your trade alerts, your purchase receipt, and your welcome email, okay? So please make sure you get that email address in there so you can get all of your content at your trading email address. Let's talk about payment information. Payment information, you'll see top right, we take the 4 major credit cards: Visa, MasterCard, Amex, and Discover. But if you glance down to the bottom right-hand column there, you'll also see that we take PayPal. All right. So 5 ways for you to get started. And as our team says right here, 333 options, 12 months of trade alerts, one-time investment, $297. $297. Let me take that down, go back to the slides. Now, remember, it's only available until midnight for the first 21 traders. TimingResearch.com /BigTrends. Now, I do have a QR code for you if you want to go there, right? Take your tablet or your mobile device, put that camera on, scan that QR code. It'll take you right to that checkout cart, TimingResearch.com /BigTrends. David, thank you for putting that link in there for folks. But folks, if you want to use that mobile device, go do it right there. Now, check out what David and the team has been able to do for you as well. As a bonus, you're going to get the Stock Watch Weekly newsletter. All right. The Stock Watch Weekly newsletter uses a proprietary algorithm to assess thousands of stocks each week using a blend of fundamental and technical analysis to find the companies that are poised for high probability index beating moves, useful both for finding potential short-term trades and long-term investments. 3 new watch list ideas are provided every Sunday at 1 p.m. Eastern Time, and subscribers occasionally receive additional special reports and other bonus research. All stocks are NYSE and NASDAQ listed, optionable, highly liquid, and current share price above $3. Now, that has a retail price for 12 months of that newsletter. So not only will you get access to the 333 options newsletter, you're going to get access to the Stock Watch Weekly newsletter as well. That's $100 value. Look what the team's been able to do for you. That's going to be yours free when you sign up at TimingResearch.com /BigTrends. Now, maybe you're still on the fence. Maybe you have some questions. Let's talk about an FAQ, frequently asked questions. What type of strategy is used? Buying calls or puts. You don't need option 2, option 3 level approval. You just need simple call and put option approval level. What are the recommended prices of a T30 trade? Again, T30 stands for 333 options. Always less than $3.33 a contract. Now, remember, the objective is to trade multiple contracts, as I've shown you throughout the presentation. When are the new T30 trades sent? Monday through Thursdays, no Fridays, between 3 and 3:30 p.m. Eastern Time. No day trades. So take that worry off your list. No day trades because it's coming out in that last hour. How will you receive those trade alerts? Remember, they're going to be sent real time via email. You heard me talk about the importance of getting that email address right in that checkout cart. But you'll also notice that we can use WhatsApp. Now, WhatsApp is a free application that you can download to your computer, your laptop, tablet, mobile device. Do you have to use WhatsApp? No, you do not. But if you want to get the trade alerts via push mobile notification, then WhatsApp's the solution. The WhatsApp setup details are provided in 2 locations. One in the in the welcome email. The welcome email will have the WhatsApp setup instructions. And then also in your BigTrends account, you'll find them under the My Account section. So if you don't want to do WhatsApp initially, then maybe after you start trading, you're like, hey, it'd be great to get these push mobile notifications as well. You can always go in and get set up for WhatsApp. Again, it's free. You do not have to use it. How many trades will you receive? Up to 10 new trades per month. 10 new trades per month. What's the maximum number of open positions? Maximum of 4 open trades. Why do you need to know that? So you can know how much trading capital to keep on the sidelines at any one point. When are trades closed using the time stop? 5 trading day time stop. Remember, 5 trading day time stop. TimingResearch.com/BigTrends is that checkout card. I know David put that in the chat box for you. TimingResearch.com/BigTrends. And here's a reminder of just what one trade has been able to accomplish. Remember this Apple trade? 4 contracts at $222 a contract, closed 3 of them at $333 or 50%. Remember, first profit target level, 50%, selling at least 2/3. This example had to round up, talked about that. 3 contracts closed, 1 remaining contract, and Apple took off over that next 5 days for a 933.78%, $2,406 in gross profit from trading 4 contracts of Apple before any commission or subscription investment. So today's special package, remember, it's 12 months of trade alerts from 333 Options, has that retail value of $3,564, knocked it down to $797 with an instant discount. But since it's Saturday morning and the Timing Research community, $500 extra off gets you down to $297. 21 spots available until midnight. TimingResearch.com/BigTrends. And don't forget, you've got the special QR code. If you want to take your tablet or your mobile device, scan that QR code, and you can go to TimingResearch.com/BigTrends. There's what it looks like. Okay. See that email field highlighted there? It's because I clicked into it earlier. Cannot drive that point home enough. 5 ways to sign up today for just $297. Remember, you get 333 Options for a year, and you get the Stock Watchlist newsletter for a year as well as a bonus. 5 ways to sign up, 4 major credit cards, and PayPal down there at the bottom. TimingResearch.com/BigTrends. 12 months of 333 Options from BigTrends, plus Stock Watch weekly newsletter, 12 months from David and his team from Timing Research. That's all I've got for you, folks. I know it's Saturday morning, and I am so grateful for you joining David and I today. So on behalf of David, on behalf of Price Headley, and all of our colleagues here at the BigTrends World Headquarters in Lexington, Kentucky, thank you once again for sharing your time with us. And as we like to say around BigTrends, trade well.
All right. Thanks, Chris.
Thank you, David. Appreciate that. Anything I need to answer out there for you or anybody else before we get about?
I just realized that there was a problem with the chat, so it's fixed now. If anyone has any questions, you can type them in the chat now.
I'm not seeing anything immediately, but I do appreciate you putting the URL out there for us.
Yeah, great presentation. So thank you
Thank
for
you.
being here.
Okay.
So
All right.
one last chance, everyone. If you have any questions, Chris is here to answer them. Oh, I'll put your email address in there again for everyone.
Sure.
It's
Thank you, David.
Chris at BigTrends.com. So if you have any
Correct.
questions after presentation, you can get in touch with him there.
All right. Thank you,
So,
David.
all right, great presentation.
Thank
Thank
you.
you for being here.
All right. Have a great weekend.
All right, you too. Thanks,
Thank
everyone.
you. All right. Bye-bye.